Our banking system is sound.
In the past 2 weeks, serious difficulties at a small number of banks have emerged.
These banks are safe.
All depositors' savings in the banking system are safe.
The banking system in the United States is sound and resilient.
Banking system is sound. Banking system is sound. Banking system is sound. Banking system is sound and resilient.
A rough week for the banking industry.
The collapse of Silicon Valley Bank, the second biggest bank collapse in U.S. history.
The Silicon Valley Bank collapse is the worst since 2008.
Social Security is structurally sound.
As president, I will not cut one penny from Social Security or Medicare.
There's an imminent disaster waiting. I mean, that's where we're headed.
2 balls, 2 strikes to Bryce Harper. Suarez delivers. Swing and a drive. Left field. It's deep. It's going. Yes! And it is gone. Yes! It is bedlam at the bank as Bryce Harper has put the Phillies on top.
Thank you for tuning in to podcast number 15 of Bogus Banks, Behemoth Bubbles, and Baseball Betting. I'm your host, Chase Goldman, and today is Friday, February the 20th. So the Supreme Court today decided to finally announce a decision on Trump's tariffs. They're going to declare them unconstitutional. It remains to be seen whether or not the tariffs will have to be refunded back to those who paid them. One thing is for sure, the people who actually bought those imported goods, the consumers, are the ones who paid them. Even the Fed came out with a study in the last week or two, I think it was earlier this week, and they concluded that 90% of the tariffs are being paid by consumers. Of course, Peter Schiff says, no, that's a 100%. 100% were paid by consumers. But the bottom line is, if there is a refund on those tariffs, it's not going to go back to the consumers who paid them. It's going to go back to the giant corporations that imported all that stuff, and they will get to report a one-time non-recurring gain to their shareholders. It looks like probably 150 to 200 billion, maybe to even 250 billion dollars that would hit those bottom lines of those corporations that paid those import tariffs. So today's market reaction to the wonderful news that they're going to, end these tariffs didn't seem real to me in the slightest sense of the word. If you go back to Liberation Day, I believe it was on Trump announced that he was going to do these 10% tariffs on the entire world. After the markets closed on April the 2nd, over the next 2 trading days, April 3rd and 4th, that Thursday and Friday, NASDAQ dropped 2,000 points from 19,500 to 17,500. So now we get the Supreme Court reversing that today, and the market rallies 190 points. Wow. So 2,000 on the way down. And that was a much bigger percentage back then, because remember, 2,000 points from 19,500 is a much bigger percentage than 2,000 points would be from a 25,000 handle now after today's rally. But I still say I've seen something. These markets are headed down. They've cast their spell, and I'm certainly convinced I've seen something and I'm going to win. Especially after today. This would have been because these markets, these fake phony markets, have forever, just rallied like there's no tomorrow on any positive news at all. And so today they did have a cover story. Apparently the first look at GDP for fourth quarter was much worse than expected, which would also be, you can spin that too, and you can have, bad news is good news for stocks, because that means the Fed's got more room to keep cutting, right? Because of the sluggish economy. So they always play that shit too. But I would have thought that with the Supreme Court ruling, now a lot of people, I think on Kalshi, they were saying it was like an 80% chance, maybe 75% chance that the Supreme Court would do the right thing and rule in favor of the Constitution. I don't think that was a lock at all. I believe the Supreme Court has heard cases about TSA, which is clearly a violation of the Fifth Amendment. Maybe not the Fifth, maybe that one too, but definitely search and seizure. And then I know for sure they've heard cases on the income tax, the unconstitutional income tax, of which you cannot have a Fifth Amendment and your right to remain silent, and also, be required to fill out these forms and sign your name to a tax return every year under penalty of perjury. The two do not coexist. There's several other points on that Constitution, on that Bill of Rights, that just 100% conflict with an IRS income tax. But the courts heard that and said, yeah, they can do it. So it was not a lock, in my opinion, that the court was going to do the right thing. This is not a court that is seeking, to do what's right. This is a court that, just like any other thing, it's political. So, you know, how surprised would anybody have been to learn that these tariffs were going to remain in place after the Supreme Court ruling? I don't think anybody would have been shocked. I don't think anybody would have been shocked at all. So for the market to have, I guess the story we're supposed to believe, with the market rallying only 190 points on this, was that, okay, well, the markets had already anticipated it by the rumor, sell the news, all that stupid shit. It's just more nonsense. You know, if you're going to lose 2,000 points because Trump put the tariffs on, it stands to reason to me that when the Supreme Court says no, you can't do that, they ought to rally right back. But I guess Trump is going to come right back with some other wormy excuse to come in and still do his tariffs. And I guess that'll be another year before that makes it into the courts. So in the meantime, he gets to do whatever the hell he wants because he's the dictator in charge. So, and I'm not to say that he's not any better than Biden was, or worse. They're both just garbage, horrible people. I hate them both. But that's what we have to deal with. So back to the trade. It has been 115 days since Andrew Ross Sorkin rang the opening bell of the New York Stock Exchange, standing in front of a giant sign about a stock market crash. 115 days since he did that. And yeah, I think I'm going to win this bet. I really do. I think today was, like I said, I think today was the perfect cover story for, you know, if they wanted these markets to go higher and they wanted to continue seeing this number go up, you know, we could have easily seen a 1,000-point add-on for the NASDAQ today. At least 800 is what I kind of figured. I was reading that, yeah, they're expected to make this decision on these tariffs tomorrow, but, you know, they've already done this a couple times, and neither time they did it. So I didn't know if they were going to do it today. I don't think anybody did. But they did it, and I was kind of telling myself last night, gee, if they do this, they're probably going to run these markets up 800 to 1,000 points on NASDAQ 100. And they didn't. They had their chance. They could have done that. They could have ran with that cover story to use their little fake number on the screen. But they didn't. And I think that's because they're ultimately planning to take the wealth from the boy. So I think that plan is well underway. NASDAQ is now down 4.4% from its all-time high set on October 29th, 2025. That was the day after Andrew Ross Sorkin rang the bell, standing in front of a giant sign about a stock market crash. And I do think that they were just outright showing off when, on the 3-month anniversary of Sorkin ringing that bell, you know, he rang the bell on October 28th that morning, and then it was 3 months to the day, January 28th, that they ran NASDAQ right up to almost another all-time high. I mean, they came within inches. I think I reported on my last podcast it was 6 1,000ths of a percent. Actually, it was 65 10,000ths of a percent. But 6 1,000ths of a percent of a new all-time high they ran it up to on the 3-month anniversary of Sorkin ringing that bell on January the 28th. I don't think that's a coincidence. I think I'm seeing something here, and I think I'm going to clean up. I think I'm going to clean up big. I don't think that they go to the trouble of casting these kinds of spells on CNBC unless they're planning to do something big like a market crash. I'm curious to know if they also telegraphed these market crashes that have happened previously. For example, the dot-com crash, maybe even the Great Financial Crisis. I don't know. But certainly the 1929 stock market crash. I mean, the witches didn't take over the world just in the last, 10 or 20 or 25 years. They've had control of this world forever. That's biblical, and that's what I believe. But, I just wonder if they did telegraph those things before they did that to the peasantry. I got a feeling they probably did, and humanity just never saw it. When it comes to a big event like September 11th, now there were so many mistakes and miscues on that thing that, a fourth grade mind can figure out they were lied to on that. Of course, there's still a lot of people that still just can't figure it out that we were lied to on that day, about that day. And, it's amazing. It's just amazing. I don't know how they pull things like this off. I can't even go there. I don't know who they are. I know that the no begins at some level. That's a certainty. So, a lot of the guys, the gold bugs, they can really relate with me on where I'm coming from on this, because we do have a conspiracy that's put right in front of our faces. In other words, we will see, and I may have talked about this on the last podcast a little bit, but we will see, Shanghai opens at 9 o'clock, I think 9 o'clock Eastern at night, and then a few hours later we get London opening, and then here comes the New York Open, and that's your danger zone. That's where they come in. Especially they like to do it on these fake government reports, but sometimes they don't even have that. But they will just smash the shit out of gold right around the time New York COMEX is opening up, either right before it opens or shortly after it opens. But they also like to use the cover of these official government reports. Oh, look, this, that. Oh, we got to sell our gold. Sell. Next thing you know, gold's beaten down for 2% in like 10 minutes. That happens all the time. And as Andy Schechtman has pointed out in some of his interviews and podcasts, no trader worth his salt would ever do that. If you've got a bunch of gold and you want to sell it, hell, you gotta get out of that easily and gently, or you're going to crash the markets. If you just come in there and dump millions and millions of ounces in 10 minutes. So it's obvious that the people who are doing this, their intention is to run the price down, not get the best price for their gold and silver. That's very obvious to me. So at some point, that no has to be a thing. There's got to be people that are in on this at the top. And so how do we determine where that no begins? We will never know. We just will never know, because there's never going to be any justice on this. I think Chase paid a $1.1 billion fine back in 2020 for rigging the precious metals markets. There's been other instances of that with some of these primary dealers and these bullion banks doing that kind of crap too. But yeah, at some point there has to be, and with this kind of money at stake, how many people know? I would think it's more than just a couple. I would think probably dozens, or maybe even dozens of dozens. I don't know. But what I do know is that these people would have the opportunity to make a lot of money on that, and I got a feeling that that's just not something you ever talk about when you're having drinks with friends. At least that's what I think. And I got a feeling that, it could be you're putting your family or your own life in danger if you want to talk about that stuff. So that is definitely going on in the precious metals markets. And I think the whole thing's fake and phony. I just do. One thing that's really been eating at me lately that I've been giving a lot of thought to is, pricing is determined at the perimeter. You've all heard that. So in other words, if you got a neighborhood of houses and the average price of the homes in that neighborhood, let's call it $500,000. Okay, and somebody wants to get out of their house and they sell real quickly and they sell it for $300,000, just so they can get that bid and get out. Okay, well then that destroys everyone else's comps around them up and down that street. All those comps are affected by that one sale. If you get another one, well then all of a sudden you've got a little bit of a problem if you own a house, and you might want to sell it later on because now your comps are getting destroyed. Okay, and I guess the markets, the fake phony markets where prices change by the minute, those markets, they would have to be the same way. But then what happens is, as you get into some of these companies like Nvidia with a $5 trillion market cap, that same logic would have to apply. It would have to apply, but it doesn't, because this market cap. So basically, you're going to sell a few shares of a stock, and you can move the price of a $5 trillion market cap. It doesn't make sense. It's never made sense. But apparently, as you get these large, massive market caps, they're supposed to be more stable and less volatile. I don't know if I really see that with these tech companies like this, but nothing about the stock market makes sense. None of it passes the smell test. As far as I'm concerned, it's all fake. The thing that's really got me is I went over the U.S. 10-year yielding 0.5% back in 2020. That's always bothered me. But then you've also got this consistent daily average trading volume on all these stocks like IBM. IBM has an average daily trading volume of $1.5 billion worth of stock every single day, Monday through Friday. They do it every single day. Within, a percentage of that, it might be $1 billion today, might be $2 billion tomorrow, but they're going to average out at $1.5 billion worth of stock trading hands every single day. Who's doing all that buying and selling? You never hear anybody interviewed on CNBC that says, oh yeah, I manage money professionally for others, and we try to buy IBM at $100 a share, and as soon as it moves up to $100 and a nickel, then we're going to sell it and make 5 cents a share. And we do that over. No, you never hear that. And then these giant funds, if you're sitting on, let's say you own a mutual fund and you own, let's call it 9% of IBM, and you want to get out of it. You've got to have somebody to sell to. It's got to be another fund it seems like you would get on the phone and call other fund managers. Hey, I want to get out of my IBM. What do you think about buying it? But apparently, I guess the story we're being told is it all goes through this phony fake money market maker, and that's how you would liquidate your position gradually over time so you don't flood the market with sell orders. And, I think they call it a bid-ask collapse or something like that, where you take out the bid stack is what they call it. It's also fake to me. I'm totally convinced this whole thing is it's a video game. It's fake. So that said, I'm not going to go on too much longer with today's podcast, other than to say that I think I'm going to win this bet. I think I've caught them red-handed with this witch's spell. You take in. Not only did they ring the bell, they did the 3-month anniversary thing where they ran NASDAQ, within inches of its previous all-time high up from October the 29th. Then you've got the Halloween deal with the BG2 podcast where the stock market crash book was just over the shoulder of Brad Gerstner when he asked Sam Altman, hey, how are you going to spend $1.4 trillion when your revenues are only $13 billion? How are you going to pull that off, Sammy? And Sammy gets offended and says, well, you can sell your shares. Enough. He acts like such a girl. I can't stand him. But then you've got that, and that's also just coincidentally on Halloween. And then you've got the November 18th CNBC presentation with Oz Perlman, which encodes November 18th encodes 9/11 backwards. 11 plus the 1 and then the 8 makes 9. So you've got that, and then I feel like they've given us the bottom of the markets. July 6, 2027, and then 7 and 6, that encodes 13. And then you've got the Simpsons, where at the end of Trump's term, the nation's going to be bankrupt and broke. And then you've also got another thing with Trump, where he was the 45th president, and he's the Trump 47th president. So you got 45 and 47. You add them together, you got 9 and 11. There you go, encoded again. I don't think it's a coincidence. I don't think it's a coincidence at all. I think they're going to take these markets down. They're going to bottom on July 6th. Again, 7 and 6 makes 13. A lot of superstition around that number. You go to just about any hotel in Vegas. I don't think I've ever seen a 13th floor on any of those hotels out there because of superstition. They go directly from 9, 10, 11, 12, 4, and then you go directly to the 14th floor. They skip 13 on those buildings. I think I've got them. I've got them red-handed. Baseball season starts with the Giants hosting the Yankees at 8 o'clock Eastern on March 25th. I believe that is going to be 35 days from today. So looking forward to that. And I do think that the witches that really run this world are making their move right now. I mean, they toyed with us. They ran the market, from October the 30th or the 29th all the way down 7.4%, and then they ran it all the way back up almost to a new all-time high on the 3-month anniversary of Sorkin ringing the bell, which was January the 28th to the day. They ran it within 0.006 of a percent, but just narrowly missed setting a new all-time high. And I think that's not a coincidence. These phony markets, I got a feeling, are going to start dropping pretty quickly now. I mean, they've got us down. We're down 4.4% from the all-time high as of today's close. And it would not surprise me at all for us to be in correction territory within the next 10 trading days, maybe even by this time next Friday, within the next 5 trading days. These markets have gone nowhere for literally almost 4 solid months. And that's not something NASDAQ does. It's either going up or it's going down, and I got a feeling it's going to be going down and down fast and hard, and that's going to drag the Dow down with it, and it's going to bring down all the indexes, and they're going to take the wealth of the boy. I'm certain of that. I won't know for sure until it actually happens, but that's what I'm betting on, and I think I'm going to win this bet. I'm still up on the trade, so I'm playing with a profit, and I can't lose very much. It's a very asymmetric trade. As soon as we get down 10%, which is the definition of correction territory, I'm going to add to this trade and buy some those long-term leaps, though, even to just get 9 or 10 months on them. My God, they're expensive. Stupidly expensive. Yeah, so, but it's always been that way with these major stock indexes, whether you're looking at the Dow or the S&P, but especially the NASDAQ, QQQ. Those premiums on these options are just outlandishly insane. But I think I'm going to try to look into, shorting some more, buying the protection on those long-term call options that would expire 9 to 10 months. I think, generally speaking, when they do have these bear market rallies, they don't last more than much over 6 months. Is pretty common from what I understand. I need to do some more research on that to make sure, but that's my plan. I want to add more as this thing continues to drop. But fortunately, I got that second chance, because when it was down 7.4, I was not all in. I was close to being all in. But when it was down 7.4%, but this last time it got back up there, and I've got all my chips in the center of the table, and I can only lose about 1% on it, maybe 1.5%. So I like the trade. It's asymmetric, and if I win, I'm going to win really, really big. But yeah, going back to the cover stories, I guess you could call it. In this, I still think the markets are completely fake, but a couple things that did come up this week. Number one, Blue Owl Capital had to close off one of its funds to redemptions, so those investors are now trapped. And then they also had plans to borrow a bunch of money to put in a data center. I think it was in Pennsylvania, and they couldn't borrow the money. So there's that. And then also, I think it's now pretty much official. Sam Altman has been looking to raise $50 billion from the United Arab Emirates. That's been going on for well over a month. I think he did go over to that part of the world and came back, and if he had gotten the funding, you better believe CNBC would have crammed that down our throat for a day or two, along with Yahoo Finance and the rest of all the fake MSM, the fake news as Trump calls it. But it's all fake. I don't care if it's Fox, it's all completely fake. If there was one real news source out there, they would have actually shown the collapse of World Trade Center Building 7 and said, hey, what's going on here? There would have been an open debate. And then especially with the melted concrete that was removed from World Trade Center Building 6, which was never hit by an airplane. What melted the concrete over in Building 6? Yeah, so that's all you need to know. Once you figure out how massively we're lied to about that day, then you can see how controlled this press is. You never know where the control begins, where the no begins, but we just know that these are the cards we're being dealt, and this is what we got to deal with. So that's it for today's podcast. I appreciate you guys listening, and we will be back with podcast number 6.